thank you for joining us. It is not as late here as it is in New York. And let's start off with Tarah, would you mind introducing yourself and what you do?
Sure. I'm Tarah Herger. I am the division manager for CCBX, which is the Banking as a Service division at Coastal Community Bank. So we have just under 30 FinTech partners that we sponsor. We mostly provide regulatory and compliance oversight, a little bit of operational support, and then of course access to the payment system and the rails, and keep our regulators happy. So we're very, very busy. We started this in 2017, 2018 when, I guess we're considered one of the earlier adopters as far as the banks that were sponsoring FinTech. And so we have sponsored a lot of the neobanks and the niche banks, and so far they're all doing okay, but we'll see what this next year to 18 months brings for some of them. It should be interesting, but we're still really optimistic about what the future holds for them.
Thank you. And I'm going to ask you about one thing you said after we introduced Martin. So thank you so very much. So Martin, where are you from?
Oh, well, where I'm from geographically, at the moment, Southeast Idaho, but formerly was in the state of Washington for about 30 years and was born in Portland. So I've got the trifecta of the Northwest covered. I just need to move to Vancouver, Canada for a little bit, and I'll have our entire region. But I'm with the CURQL Fund, not CURQL, CURQL. Marketing agency got involved, had to spell it weird. But what we are is we are the largest and possibly only VC strategic fund on the continent that is entirely supported by the credit union industry. We've got 68 LPs, which includes 64 credit unions and 4 credit union adjacent organizations. We've been active with this fund for about 14 months, and we've made 14 investments so far. So we've been moving at about 3 times the speed that we had projected when we launched the fund. And that was largely because 2021 was kind of a crazy year for investing. And if you didn't jump to get in, then you kind of got left out in the cold. So we were part of the feeding frenzy, and now things are slowing down quite a bit. And we're still doing the same thing we do, which is we invest in any and all types of companies that support credit unions via technology solutions, whether that be member facing, back of house, market makers, or anything else. And we've made investments in several different areas in the space, but we've still got nearly $200 million to deploy and a few years to do it. So we are still going to remain very active.
Okay, so thank you very much, Martin. I do want to mention a couple other things though. Before you worked for CURQL, where were you?
Before CURQL, I was with Sound Credit Union in Tacoma. I was the VP of Innovation and FinTech Partnerships.
Wonderful. And I mentioned that because you are, you've been with the credit unions for a while, and I think Sound Credit Union of Tacoma is one of the more tech-forward credit unions out there. I mean, I just see, from the outside looking in, a lot of innovation happening there. And Tarah, you were talking about a lot of the innovation happening at at Coast Capital Savings. And I like this for 2 reasons. One of them is you are both very innovative, and it's in our region. And the second thing is neither one of you were or are at an institution in Seattle. Tarah, you are in Everett. Martin, you were in Tacoma, and now you're in Southeast Idaho. I love stories of innovation not always happening in the big tech cities. It's this whole region, and it does exemplify that really good tech can happen anywhere if we have the focus. So thank you. And Martin, part of your job is looking at lots of fintechs across the United States, right?
Yeah, I look at 10 to 20 companies every week.
Excellent.
Yeah.
All right. Now I'm going to go back to you. So thank you, Martin. But Tarah, I got to go back to something you said. When you said the CCBX division, a lot of us don't know what that means. And you said you sponsor fintechs and you have fintech partners. What do you actually mean by that?
So CCBX is the division. Sorry, I'm losing my voice, of course, now. The division of the bank that provides banking services to fintech. So as we know, we don't have a great program for fintechs to get a charter right now in the US. And so all of them, most of them, if not all of them, need a bank sponsor. So CCBX is the division that handles the sponsorship of those fintechs. And we just in the very beginning started calling our fintechs partners because we needed as much from them as they needed from us. We wanted to learn from them. We wanted to innovate. We wanted to reach our customers in new digital ways here just locally in our community here in the Northwest. And so we didn't want to be like the big bad bank in the background enforcing all the compliance rules. We really do view it as a partnership. And so that's why we call them fintech partners.
Oh, not bad. Now, this approach that you're describing, is this a fairly new development?
No, there's been like white label fintechs. I mean, your Home Depot card or, it's been going on for a very long time. It wasn't widely marketed by any banks, I don't think. And it was mostly the larger banks that were sponsoring specific programs like the Nordstrom card or the Home Depot card. So I'd say probably just in the last 10 years or so has been obviously when everyone has seen the fintech boom and the neobank boom and the fintech saying, hey, we think we can do this better than banks, and banks saying, oh, no, you can't. And then finally that like coming together and the partnerships where we're like, okay, hey, we don't have to be enemies. Like we can work together and, for a common goal of serving the people.
All right. But what is exciting to me is it looks like many more community banks are getting involved in this than ever before. As opposed to
there's a big reason for that.
Yes.
Yes.
But I'm very excited to see that starting to happen because I think this setup, which I believe is called banking as a service, right? Yeah. It seems to be a win-win-win situation where it's good for the community banks, it's good for the fintechs because they let the banking do all the financial transactions and all that other stuff, for which what you're talking about way more than I do. And it's good for the consumers. But it looks to me like this is a relatively new phenomenon with outside the purvey of the big banks, with the community banks just in the past 5 years. Would you agree with that?
100%. Yeah, it was the big banks, but it was a few really smart fintechs that realized that they could get more revenue from interchange if they partnered with a smaller bank that wasn't subject to limitations on the interchange that they could earn. So the first few fintechs that figured that out, all the rest of them wanted to partner with someone else that could get them that higher revenue. And that's a really big question that we're asked because we're growing so quickly is, hey, are you guys going to stay under 10 billion? That's the threshold. And how do you plan to do that? How do you plan to manage your balance sheet to make sure that, that you don't grow so fast and so large that our fintech is no longer able to get that higher interchange rate?
Not bad. But all right. And is this something that you see taking off among other community banks as well?
Oh, absolutely. Our CEO is very adamant about, forming a community with other community banks, and we're all in this together. And we meet with probably 1 or 2 local community banks, some not local, that fly in to see us, just talk about, like, you know, lessons learned and how we would do it differently if we had to start all over. And so, yeah, I think that there's still opportunity for community banks to get into it, and then for fintechs to find those community banks that are just trying to get their toes wet and really want to work hand in hand, and get them to market, because it is hard right now because there's so many fintechs looking for a bank, and there's not a ton of us that are doing it. So the fintech's got to be willing to kind of take a risk with working with a bank that maybe doesn't have, you know, one under their belt yet, but that could be an advantage as well if you know, because can work through it together, and they get more hands-on attention from the bank.
Not bad, not bad. But yes, right now there's a ton of fintechs, but the banks that can work with them, that is growing as an industry, right?
Yeah.
So would you agree with the statement that this is a time of big change and big opportunities for a lot of B2C fintechs?
Mm-hmm. Yeah, definitely.
Yeah, and that's what I've been saying. I don't do B2C, but I do see a lot more opportunities in that sense, where whenever there's a big change in the industry, that seems to be a time of great opportunity. And I'm so excited that there appear to be a fair number of that, a lot of that happening in our region.
Mm-hmm.
With you, one of the first, not the first, but you know, it's nice of you to be here and not in some other part of the country. Thank you. So, Martin, on the credit union side, what are a couple developments that you have seen out there in the credit with fintechs and credit unions?
Yeah, so I mean, there's a number of things happening. Nick's going to get into blockchain a little bit later, so I'll stay away from that topic. Although there is some recent activity in that space. You know, the other thing that I'm seeing, and this does kind of tie in pretty directly to what Tarah's talking about, and that is just embedded fintech. Krista mentioned it earlier, you know, citing the A16Z quote. You know, every company will be a fintech company. Here's an example of that. So if I ask the audience, and I can't see you all, but if I said, you know, raise your hand if you have a Goldman Sachs card, maybe 1 or 2 people would raise their hand. But if I said, raise your hand if you have an Apple card, we might get a lot more hands. Well, the Apple card is a Goldman Sachs card. Goldman Sachs is the issuer of the Apple card, but Apple is now a fintech because they're offering a card, they're offering a digital version of it, they've got it in their wallet. And what we're starting to see, and what I think we're going to continue to see, is this idea that when I want to interact with a company to purchase a product, goods, service, experience, whatever it might be, well, why should I go out of my way to access the funding that I need for that transaction? Why not just be able to do it right in line with the experience? And essentially that's what embedded fintech is. And we're seeing a lot more companies that are finding different ways to enable, you know, kind of different takes on that and different versions of that for a variety of businesses out there that are not chartered financial institutions.
Not bad. And I am encouraged about this, because this setup of embedded fintech, now I didn't hear about this, you know, the example you used, but one application of embedded fintech, as I understand it, is some financial institutions can set themselves up to partner with fintechs in a different sense than what Tarah was just talking about. Tarah, you were talking about with B2C fintechs, right? Where the app is the customer facing part and the banking is in the background. All right. Whereas Martin, what I've been reading about, another application of embedded fintech is a financial institution standardizes a lot of their data and gets an infrastructure so that they can easily partner with some B2B fintechs out there much more easily than they could 5 or 10 years ago. Do you agree with that?
Yeah, absolutely. It was something that we were doing at Sound Credit Union, and that a lot of more forward-thinking credit unions and community banks are embarking on, which are these, not to overuse the phrase digital transformation, but it's a true transformation in terms of how they're able to integrate with these different fintech partners. Moving away from legacy platforms that are closed off systems into a much more kind of open banking friendly architecture with APIs and the ability to allow fintechs to not be finance experts, but be able to offer financial services. So for example, I may not understand all of the regulatory requirements around checking and savings accounts, but if I've got a credit union or community bank partner that has API endpoints for me, then all I have to do is say, hey, I want to be able to KYC a potential customer and offer them some banking services. Through those APIs, the credit union can offer those services and theoretically access a lot more members.
Not bad. So it sounds like this makes a lot of opportunity for B2B fintechs or any service that would work with a financial institution. All they need to do is configure themselves to this standardized set input that the financial institution sets up with the APIs. Is that right?
Yeah, it is. And so I think what we're seeing with this kind of next wave of B2C fintechs, if the last wave was, we're going to be neobanks, we're going to be challenger banks, we're going to completely replace the financial institution. This next wave is essentially saying, we're going to build amazing experiences, but we're not going to become a bank. That's hard. We're not bankers. We're great at building experiences. So let's go build an amazing experience for a particular targeted, group of people, and make those connections so the heavy lifting in terms of things like regulatory and compliance and account structure is something that someone else worries about, and we can just do what we're good at.
And I have to say, I've been going to bank and credit union conferences for years, and I've been very encouraged by this development, because I remember not so long ago when there would be this talk of the fintechs are doing this, we need to better do this to compete. But trying to compete with fintechs on the tech for inherently a financial institution is a very, very, very hard problem. A couple of them have done it, but there are certain things that financial institutions really are good at. And it's nice that there's this setup with both embedded fintech and banking as a service, where the financial institutions can double down on what they're superior at and just partner with the tech companies with what they are really good at for a better experience overall for everybody, I think. Maybe that's a little simplified, but I'm excited that there's so many opportunities here for fintechs with both of those ideas that the two of you exemplify. So thank you for that. One more thing I want to ask you about, Martin. You mentioned to me earlier, you saw that a lot of B2B fintechs were going into 3 separate areas that work together. Do you remember that conversation?
Yes. Yeah. So it does go back to the every company will be a fintech. So take 2 steps back from that. So 2 steps back, every company will be an internet company. That was said, we all laughed. Now every company is an internet company. The next thing really in between that and fintech is every company will be a data company. And that's pretty much happened. Whether or not every company has figured it out or has really found the best way to leverage the data that is being generated by their business and their customers. I think we are in that place now where data is a new version of currency out there, and we're seeing in B2B fintech a lot of work in the data space. Even just a few years ago, you were pretty much a data and analytics company. That mostly meant that you gobbled up the data that was in the core and spit it out in a little bit prettier visualization than the ugly report that the core did. But now we're seeing really, I think, 3 areas of focus. One is the data processing, the data engineering itself, and moving beyond the basic ETL and SQL data warehouse and into things like data fabrics, the data lake house and data and just very, very interesting advancements in how data can be handled, because there's so much more of it. A second area, of course, is AI, machine learning, particularly as you get to the predictive and prescriptive solutions out there, rather than just kind of the look back, which is all we had a few years ago. And then the actionizing of the data. So particularly for credit unions, and I think community banks as well, it's great if you give me all these insights, but I don't have an army of people to go act on them. So if you can specialize in an area and dig out those insights from my data and help me take the action, we're seeing a lot of traction with companies in that space as well.
Not bad. Nice way of putting it. Thank you so much, Martin. That's why I want to ask you this. State it right here. So thank you very much. We're running out of time. Do either of you have any closing thoughts? Although what you've said already is just so great. Both of you are great tech futurists with explaining what's going on out there.
In the interest of time, I'll say no.
The only thing, oh yeah, please. The only thing I would say from an investor standpoint, we're seeing kind of an intersection of 3 things. So for us, is there market demand for what this company is providing? Does this do something for the end user, the end member or customer? Does it hit the mark for us strategically with our credit unions? Is this a problem that our credit unions are trying to solve, or community banks, are they trying to solve this problem? And then the third piece is this transformational technology? Is this something new that hasn't really been done before, or is this just something we've seen over and over that's just reskinned and might be a little bit prettier? So we're looking for the transformational things that address our credit union problems and address the demand from the member and the consumer side of it. I think if you find that trifecta with what you're passionate about, then you're going to be headed in the right direction in terms of investing.
Oh, thank you.